Hey guys, let's do a quick wrap up of the earnings call from NIO yesterday. So I first reported about the financials, the earnings report. You'll find a link in the description. And now, yesterday night I already listened to the earnings call, and I will give you my condensed information about that in a second. But first of all, let's talk about the markets. Today it seems like Hong Kong is deep in the red, so most of the Chinese names are quite red. I don't see any particular news actually out there. Maybe it's just this normal World War III Friday sell-off to take some chips off the table. We had, of course, quite a substantial rally in the last couple of weeks, so this might be a non-news event and more on a technical side. We'll see. If you think that this could be a sustained rally and this rally may have legs, and we don't go deeper significantly, that might be a good pullback to add to positions for cost averaging. Here's some news around that. Yellen just said that currently it's not appropriate to sanction China as a Russian partner, and they're also not seeing the end of globalization, which I think is good to hear such kind of a positive outlook by the US side as well. She's also bullish on the US economy and the jobs. And then, interestingly, Meituan also reported today. The headlines are mostly negative. I think the report is in line. And I would just point out that they have been growing 56% year over year. And that in a very tough year, right? So what can they do once the so-called tech crackdown is over, once they are reaping the benefits of their pivots in terms of the business model and their new growth initiatives. So that's about it. Maybe one more on the macro. There is the China Finance 40 Forum, which is basically an important think tank for policymakers in China, also regarding monetary policies. They see that there is potential for monetary easing in China. And now let's go into I tweeted out some stuff yesterday about the earnings call already. So Lieben said on the Q4 earnings call that the ET7 demand is much more than reported by the media. And he was asked by one of the analysts around the so-called media leak that was basically saying they had 5K of monthly orders, more or less. So that would amount to about 60,000 in total, if you will, like on an annualized basis. And Lieben said, well, the demand, he cannot give specific numbers. So unfortunately, no concrete, let's say, order backlogs and order numbers, no specifics there. But it should be significantly higher than the 5K monthly, which I, of course, take as a positive. Then Lieben said, based on the current order flow for the older models, so that's the ES8, the ES6 and the EC6, they see that based on the March order flow, these cars are still receiving a demand for 10K units a month, and that these cars actually also even going forward will still be competitive, although acknowledging that the in-car hardware is somewhat struggling right now with some of the improved software capabilities there, but they will provide upgrades to the hardware to existing owners and to future owners. And so he doesn't see a demand issue for these models. And I think that's very important because this kind of provides a baseline throughout the year. If you are roughly at 10,000 units a month just from these models, that's alone already 120,000 vehicles on an annualized basis, plus minus 10K maybe. But if this is like that, then we can see any additional sales by the ET7, ET5 and ES7 this year will just come on top of that and getting us closer to what I'm projecting still is around a 100% year-over-year growth. Regarding the ET7, and I'll go into more detail into that. They said that the full production cadence will only be reached in Q3, so not right from the start. In the beginning, it might be a slower ramp, and that's because the ET7 is currently produced in the old factory, the F1 factory, and has to split the production capabilities with the existing models. And he said that the ET5 will be considerably faster to scale because it's already happening in this new factory. So it seems like the ET5 will be from scratch, not having to share the lines with the other models. Then, when I was going into the financials yesterday, I already pointed out how the overhead and let's say the inputs, the invest is considerably higher than I also expected. And well, he said that this is basically going to continue. They're roughly spending more than $1 billion in R&D. More than 9,000 people are going to work in this area. So considerable amount of investment into coming up with new products, improving autonomous driving technology, anything else maybe beyond the car, even like the rumored cell phone and things like that. So this seems to be the plan, and still given also a long-term view that's saying that 2024 is projected to be the first profitable year on a yearly basis. And then I found this one also to be very important, the NAD, so that's NIO's new autonomous driving subscription that will come out with the latest NT 2.0 hardware, will be launched as expected before. And I mentioned that one in my last video again, also on the NT 2.0 platform in Q4. So I will take it with a pinch of salt here. I think there might be a delay because software can take longer than anticipated, but that's when the LiDAR will be activated and the full hardware capabilities will unleash on the ET7 and the ET5, and users can get the subscription, which will iteratively improve the self-driving capabilities of the NIOs, similar to what we have seen from Tesla's full self-driving. So I expect a smaller release in the beginning and then gradually increasing that. So what else? I just done these slides here, and forgive me, these are not really finalized or anything like that, but just want to put it out there before the market open. Basically visualizing the factory setup here. So we have the existing NIO JAC plant, which they call F1, so factory 1. And here you see the kind of the issue, which is that they have 1, 2, 3, 4, 5 models that will be kind of scrambled within this factory. So currently ES8, ES6 and EC6 are being produced there. Now they're starting also the ET7. I expect that the ET7 may actually at one point in time possibly move over there into the factory 2. Maybe let's grade that one out here a little bit. And additionally, I also think that the ES7 will ultimately move to NIO Park. However, they of course need somewhere to start this production, and for both the ET7 and the ES7, while NIO Park is still being built. And in terms of capacity, they spoke about 60 jobs per hour or 4,000 hours per year, which would result in 240,000 capacity or 20k units per month in a normal operating and work setup. But if they're working overtime, 5,000 hours a year, that would result in 300k of capacity for just this plant. And they have the same plant basically for NIO Park F2, which that's in the initial stages. The first build out will also see this kind of a capacity. So they mentioned on a timeline here that for the first plant, this will actually achieve this kind of metrics by the middle of the year. And the second plant, I have to adjust that one, possibly between Q3 and Q4. And so that would give them in total a capacity of 480,000 annualized production. or maybe up to 600,000. But of course, this is nothing that we would see realized fully in this year already. But that's coming to the stage that I think we can plan with for the year after then to be fully unleashed. But back to the timeline, in Q2 we'll see the ET7 deliveries start, but in Q3 only when it will actually achieve a full production scale. Meanwhile, ES7 quite early, Q3 deliveries start. Deliveries, that's pretty fast. Also September deliveries of the ET5 and higher production pace from the beginning, which they have mentioned, because the ET5 is actually already in the new factory, so they can scale that one faster than what can be expected from the ET7 at the very beginning. And then, as I mentioned, the autonomous driving subscription release in Q4 and the full year 2024 profitability. These were kind of the key metrics that I got from the earnings call. Not too much of a explicit guideline for Q2, and so I think analysts and the markets will actually watch and see the next months, like will the deliveries be above the 10K? And then I mentioned if that's the case, I think with all of the new models here coming up on top of that, then this gives us a nice better view on the growth trajectories on the company. I was happy to hear that there were not many excuses around battery supply constraints, chip supply constraints, and Ukraine crisis and material input, although all of them have been topics, but NIO didn't say like, oh yeah, it's currently limiting us in a way. However, the downside might be here that at any point in time they may be actual real issues going forward at some point, and may either be an excuse why it's not going up, or maybe the real underlying issue. But currently from the call, as it sounded to me, that was actually currently not an issue. Let me finish the video by one thing that I really liked about another insight about China here. And China Post is venturing into the coffee business in order to provide a better user experience. If you compare that, 54,000 post offices of China Post in China, whereas more than 5,000 Starbucks stores serving coffee in China, and Luckin Coffee already also overtook Starbucks, more than 6,000 stores. This is kind of the innovation and smart moves, even from a state-owned enterprise in China, which makes me kind of smile and giggle, because I think it's just a clever move and shows like how business savvy they are and consumer oriented in some ways. So China is not always easy to understand. Let's see what's happening in the markets today. Thank you guys for watching, and see you in the next one.